Hello, Google Ads enthusiasts. Welcome back to another section in my Google Ads Pro course. This is the sixth video of my Google Ads Professional course series. In my last video, I began setting up our first search campaign. I covered settings up to locations and audiences. Now, we'll move on to the next crucial section, budget and bidding. This section is vital as it determines the success of your campaign. You need to understand the various bidding strategies available in Google Ads, how to configure them, and which strategy to use for your client. With that said, the first setting in the budget and bidding section is the budget. Here, you'll specify how much money you want to spend daily on this campaign. For me, my currency is set to dollars, so I'll set it to $100 as an example. I've selected my region as the United States and my billing currency as USD. If you choose a different currency, like euros, AED, etc., you'll need to enter the corresponding amount. Once you create your account with a specific currency setting, you can't change it later. The same amount will be billed to your credit card based on your selected country and settings. So, I'll set it to $100 as an example. After selecting my region, I can proceed to the next section, which is the budget. One important thing to remember is that when you set a daily budget, for example, $100, Google might spend $100 on some days and only $80 on others, even if everything is running smoothly. However, if you consider the monthly total, say for a 30-day month, Google will not exceed $3,000, which is your daily budget multiplied by 30. On certain days, Google might spend a bit more or a bit less, depending on its analysis of traffic trends and potential for better performance, conversions, or clicks. So, while there may be daily variations in spending, the overall monthly expenditure will not surpass the daily budget multiplied by 30. This is a very important aspect you must understand. Additionally, it's important to ensure that your credit card has a sufficient limit when you add it to your account. Google Ads will attempt to charge this card, and there must be enough funds available. If there are insufficient funds, the payment will be declined. In such cases, you'll need to update your billing settings to resume your campaigns and accounts. Some people have trouble adding a credit card. Remember, if you don't want to add a credit card and your ads or account get blocked, you won't be able to use that credit card again in Google Ads. This can be an issue for freelancers working with clients who either don't want to add their credit card to the ad account or the freelancer doesn't want to use their own card due to payment concerns. Clients may be reluctant to pay in advance, leading to complications. There is a solution. Many companies offer a credit line with Google. You can pay these companies, and if you're a freelancer, you can ask your client to pay them. They will send an invoice and create a Google account with the provided funds. For example, here's how it works. These companies created an account for me after I paid them $10. I didn't need to set up a credit card. If you go to the tools and billing settings, you'll see the billing is already set up with a $10 limit because I paid them $10. Similarly, you can ask your client to pay these companies. If they pay $1,000, the company will create an account with a $1,000 limit. You won't need to set up any billing. Even if the account gets rejected for any reason, they can instantly create a new account for you. This way, you avoid issues with blocked credit cards. There are many companies like this. For instance, I use Kimi Agency for my freelance work. I'll include the link below. You can check them out if you're interested. Their website has all the terms and conditions. Let's return to our account. Once we've set the daily budget, you can adjust it anytime while the campaign is running. For example, if you initially set it to $100, you can change it on the second day if you want to reduce the budget. The next important setting is bidding. By default, it will show options suitable for new users, which are automated and will automatically select a bidding strategy. However, we will manually select a bidding strategy by clicking here. It might say, "Not recommended" for new accounts. When you access the bidding strategy section, you'll see 6 available strategies in Google Ads. There are 6 automated bidding strategies and 1 manual bidding strategy. I don't support manual bidding strategies because Google's AI-driven and data-driven algorithms are highly effective. Therefore, I prefer automatic bidding strategies. To illustrate, if we have a budget of $100, a manual bidding strategy would involve specifying bids for each keyword. For example, if we are targeting best luxury car to buy for Lexus, affordable sports car in the USA, and number one sports car 2024, we would set specific bids for each keyword. Manual CPC means telling Google how much you're willing to pay per click for each keyword. For instance, you might set $5 for best luxury car to buy, and different amounts for other keywords. This can become cumbersome with many keywords. In contrast, Google offers 7 bidding strategies tailored to different advertiser needs and campaign goals. Understanding these strategies is crucial for campaign performance. Many tutorials overlook the importance of these strategies, but they are the most critical step in setting up a campaign. Before diving into the specifics of each bidding strategy, it's essential to understand some key terms. These strategies are a major factor in your campaign's success. Let's start with the term impression. There's no inherent logic to these terminologies. You simply need to memorize them, much like learning the alphabet when studying English. These terms are the foundational elements of any campaign. An impression refers to the number of times your ad is displayed. For instance, if I search for best gynecologist in the United States on Google and I see ads from King's College Hospital and firstdaysurgery.com, those are impressions. Even if there are ads below the fold that I don't see immediately, they still count as impressions if they are displayed. It doesn't matter whether I click on the ad or not. The fact that Google has shown the ad counts as one impression. This means that when I search for best gynecologist in the United States and Google displays the ad, it counts as an impression for the advertiser. It's crucial to understand that an impression is simply the display of the ad, not whether it was clicked. Many people mistakenly believe that an impression only counts if the ad is clicked, but it actually refers to how many times the ad is shown for a particular keyword. Next, let's talk about CTR, which stands for click-through rate. In your Google campaign, you'll see both impressions and CTR. CTR is a measure of how often people click on your ad after seeing it. For example, if your ad is shown 10 times, 10 impressions, and 2 people click on it, you have 2 clicks out of 10 impressions. This gives you a CTR of 20%. In your campaign dashboard, you'll see impressions and CTR displayed. CTR is crucial because it indicates the performance of your ad. A higher CTR means your ad is performing well. That's what CTR is all about. The next important concept to remember is conversion. An impression is the number of times your ad is shown, and CTR, click-through rate, is the percentage of those impressions that result in clicks. Once someone clicks on your ad, what happens next is called a conversion. For example, if I search for best gynecologist in the United States on Google and click on an ad for King's College Hospital, I am taken to their landing page. If I then leave my name, email, and phone number, this action is considered a lead for them. For the advertiser, this is a conversion. It means the person saw your ad, clicked on it, visited your landing page, and showed interest by providing their contact details. Conversions are crucial for us as marketers because they indicate how many people are taking the desired action. We don't just want to spend money on impressions and clicks. We want to see conversions. If people aren't converting, it means our ad isn't performing well. So, understanding conversions is vital. Additionally, a click simply refers to the number of times your ad is clicked. Another important metric is CPA, cost per acquisition. CPA indicates how much money you are spending per conversion. For example, if you set a campaign budget of $1,000 and receive 100 clicks, but only 10 people fill out the form on your landing page, your CPA is the cost to acquire each lead. You can calculate CPA manually, but if you have Google Conversion Tracking installed on your landing page, it will automatically track conversions and show you the CPA. For instance, if I am running ads for King's College Hospital and my CPA is $200, this means each lead costs $200. If I am advertising for a mortgage company and spending $5,000 monthly, but generating mortgage leads worth $5 million, I can evaluate whether the high CPA is justified by the quality of the leads. Understanding CPA is crucial because it helps you adjust your bidding strategy based on the cost effectiveness of your campaigns. If your industry typically has a higher CPA, you need to tailor your strategy accordingly. In summary, CPA helps you measure the cost of acquiring a customer and is essential for evaluating the success of your campaigns. These are the 4 primary metrics that everyone needs to understand to run campaigns effectively and analyze their performance. Additionally, there are 4 more derived metrics. For example, impressions indicate how many times your ad was displayed. From these primary metrics, we can calculate secondary metrics, which I'll explain, but you don't need to memorize the calculations. The first derived metric is return on ad spend, ROAS. This is calculated using sales and the amount spent. For instance, if I spend $100 on a campaign and generate $1,000 in sales, the ROAS is calculated by dividing the sales by the amount spent and multiplying by 100. Essentially, it shows how much revenue you made compared to what you spent. For platforms like LinkedIn, there isn't a direct ROAS if the goal is to drive traffic and registrations. However, they can calculate a long-term ROAS based on how many registrants later purchase a premium service, known as lifetime value, LTV. Google Ads can't calculate immediate ROAS for campaigns aimed at registrations without direct sales value, such as real estate lead forms. Next, we have the click-through rate, CTR, which is calculated by dividing the number of clicks by the number of impressions and multiplying by 100. CTR can range from 5% to 100%. For example, if your campaign has a CTR of 10%, it means that out of every 100 people who see your ad, 10 click on it. If I see an ad for London Hospital twice, but click only once, the CTR is 50%. That's how CTR, click-through rate, would be calculated. CTR measures how engaging your campaign is. A higher CTR means more people are clicking on your ad after seeing it. Next, we have CPA, cost per acquisition, which is the cost per conversion. It's calculated by dividing the total amount spent by the number of conversions. For example, if I spend $100 and get 2 conversions, the CPA is $50 per conversion. Similarly, CPC, cost per click, is calculated by dividing the total amount spent by the number of clicks. If I spend $100 and get 50 clicks, the CPC is $2 per click. CPC is a broad term, and some people refer to Google Ads as CPC because advertisers are charged only when someone clicks on their ad. Understanding these metrics is fundamental and will help you in the long run, so please focus, even if it seems tedious. For example, if an ad is displayed 100 times, 7 people click on it, and 2 people fill out the lead form. With a total spend of $50 and $500 in sales generated, you can calculate the metrics based on these numbers. Try calculating CTR, CPC, and CPA on your own to see if your results match. Now that you're clear on these important terms, we can move on to understanding the different bidding strategies. When creating a campaign, the bidding strategy you select is crucial for its success. This is often the first question asked in interviews. What bidding strategy would you use for this client? Let's go through each bidding strategy to understand what they mean and when to use them. Let's look at the first bidding strategy, which is target impression share. This strategy is ideal for those who want to use Google search for brand awareness. It's particularly useful when a client or your own company wants to ensure that their ads appear at the top of search results for specific keywords, thereby establishing brand recognition. For example, if King's Hospital wants its ad to appear at the top whenever someone searches for best gynecologist or best dentist in Dubai, regardless of the immediate results, their priority is visibility. In such cases, you would select the target impression share strategy. This strategy increases your ad's visibility on Google by prioritizing its placement at the top of search results. For instance, if a doctor frequently searches for best gynecologist to check their ranking, Google will still show your ad, even if this person never clicks on it. Google understands that your objective is to appear at the top, and it will prioritize your ad accordingly. When you select this bidding strategy, Google will ask if you want your ad to appear at the top of the page or in the first page results. You can choose based on your specific goals. The next bidding strategy is maximize clicks. This strategy is ideal when the primary objective of the advertiser or your company is to generate traffic from Google. For example, news sites like CNN or BBC.com aim to drive visitors to their websites rather than having them fill out forms or purchase products. They bid on keywords like breaking news to ensure their ads appear whenever someone searches for these terms, thereby generating traffic. Clients who prioritize traffic generation, such as blogs or informational websites, would benefit from this strategy. They focus solely on attracting visitors through Google Ads. without prioritizing lead forms or other actions on their site. When you select Maximize Clicks, Google will show your ads to users who are more likely to click on them, leveraging its knowledge of user behavior. This ensures your ads reach the right audience, maximizing the number of clicks. Think of the bidding strategy as a tool where you instruct Google on how to allocate your daily budget of $100 to achieve your specific goal. In this case, the goal is to maximize clicks. The next strategy is conversion value. Conversion value is ideal for e-commerce clients aiming to generate the highest possible sales value for their products. For example, if I sell a range of shoes, I want my ad spend to generate the maximum value, regardless of cost per conversion, cost per click, or ROAS. The focus is solely on getting the best value for the money spent, meaning I should make double the amount I spend on the campaign. E-commerce clients with this objective can tell Google to maximize the value they get from their ads. Conversion value is calculated based on the value you provide to Google on your website. For instance, if a shirt is priced at $100 and a shoe at $50, you pass these values to Google through conversion tracking. Google then understands that it needs to generate sales worth these amounts. This is an advanced level bidding strategy, suitable for clients who know their product values and want to maximize their ad returns. The last strategy I will discuss is conversion. This is another advanced bidding strategy, and it is ideal for clients running Google Ads campaigns who want traffic that converts on their website. For example, if I am a real estate client running Google Ads for 4-bedroom apartments in the US, my goal is for users to click on my ad, visit my landing page, and fill out a lead form so the sales team can follow up. The focus is on generating leads and conversions. Similarly, if LinkedIn is running a campaign to drive registrations, they falls into this category because they want traffic that converts into registrations. For clients focused on lead generation or e-commerce sales, such as selling shoes, the goal is for users to search for sports shoes, click on the ad, visit the website, and make a purchase. In these cases, you would use this bidding strategy. The key difference between maximizing clicks and conversions is that maximizing clicks focuses on generating traffic without necessarily converting, while conversions focuses on traffic that converts. Google uses its data to analyze user behavior and determine how likely users are to perform a specific action on your website. This analysis impacts the overall bidding strategy and budget allocation. Conversions is an advanced bidding strategy. If not understood well, or if the right signals aren't given to Google, the campaign may fail. Therefore, understanding this strategy is crucial for anyone running Google Ads campaigns. This is why I emphasize that understanding these bidding strategies is fundamental for anyone running Google Ads campaigns. They are crucial for long-term success. I hope this explanation was clear. Thank you, and I'll see you in the next session.